Meeting recording is now in progress. So I don't know if anyone else is going to want to copy this or not, but at least we have it. And we've got real high definition this time, too. So I know how many people looked at the numbers and couldn't make them out last time. You may still not be able to make them out in here, but hopefully on the recording it will be easier. So we really appreciate let's have a nice welcome, hand of warm welcome for Dave Thomas too. Just before Dave starts, let's recall where we were last time. Dave, how many people did not come last time and so are starting fresh now? Okay, we've got 1, 2, 3, 4, about four people. So Dave, could you possibly do a little bit of a recap for those people, or do?
Sure. I don't have the slides that I started with last time. To be honest, I didn't. I just kind of forgot about bringing those along.
Oh no, that's no problem.
But yeah, I guess what we did last time was we started off with a trade done by John Locke, the M3 trade, and I was running through there was 2 samples that I had done. One was a quick one, was basically no adjustments. Basically, it just went on and off. And then we started into one here that was a little more detailed. This was the one starting on here, May 23rd, 2014, of which we went through, a few weeks worth of time frame. And so basically, unfortunately, we ran out of time, but we thought since I had done all the base work of preparing this, we thought it would be good to get back together. And Don, I thank you for the opportunity to come back and hopefully not bore you with a little bit more time of how this M3 is done.
No, it's very generous of you to agree to do so, and it was a function of the fact that you had said last time that you had some more. We didn't want to miss it if you put that work into it in the first place.
Well, good. I think that so just to give me an idea, Don, about how many people do we have tonight?
Let me see. 1, 2, 3, 4, 5, 6, 7, 8, 9, about 30. I would say about 30 tonight.
Oh wow! So is that about the same as it was last time?
No, we had like closer to 50 last time, but hopefully, I think maybe we've got the people who are really interested this time. So that that may work for us.
Okay, great. Well, I think one of the and obviously people are probably aware, Don, that you've told them, my name is Dave Thomas, and I'm a full-time options trader. It has kind of turned into a bit of a family business, so to speak, because both two of my 3 kids are also 100% full-time traders as well. They're 20, 23, and 30 years old, and they have been trading each for about 4. My daughter about 4 years, who's about 30 now, and my son, who is 23, and he's been trading for about 5 years. So they both had other full-time jobs, but now for some time they both, my daughter has given up her full-time job to just concentrate on this 100%. But my son, who's does it also, he likes to, he doesn't feel it actually keeps him busy enough, so he's out there pounding the pavement, and he has a full-time job as well. So so he likes to do both. So so that's become a kind of like I said, I also mentor and teach my kids, and I have been doing that for quite a few years. I've also taught and helped various neighbors and friends. And also started about a year ago with John Locke. He asked me to come on board to join him to help people. He got just way too busy, and so he asked me to come on board to help with the mentoring aspects of John's business, the Locke in Your Success, which is basically a mentoring business. And although, as I think I mentioned to you last time, guys, that this is a very this is more of a essentially a give back situation. We're trying to just help people that are interested. It is not the main focus of what we do, because we are full-time traders. And so, I was happy to join with you guys in I guess about a month or so ago when we joined in, and now here on just after Valentine's Day here. So hopefully maybe you've had a chance to look at some of the trades. If anybody of you, I don't know if anybody is actually doing this trade at all, that would actually be nice to understand. I think there was one.
Well, let me ask. Do you want me to ask?
Well, I think there was, I believe there might have been one gentleman. I don't remember his name, but I think he actually, I think he's from the group, but actually I think may have gone and decided to, I think, get the M3 program and possibly others. I don't have his name at my fingertips, but I remember his last name was Walu or something like that, Waliu.
Well, that's great. And we'd ask him if he's here to get in touch with us so that we can get the benefit of his experience too.
Yeah. And I guess, and to note that Don, the same thing, we had asked the folks from SMB that because we kind of extended the session, if there was still an opportunity for you guys, if anybody was interested in purchasing the M3 program, they have graciously extended the same 5% discount offer to you guys for anybody that's watching tonight. So that is still available. And then the same code, which was the letters RD, that's Ralph Demo Options, RD Options, which I believe I put up on one of the slides last time, but in case anybody didn't remember that or didn't see that last time, that is available. So you would just give that to the folks at SMB if anybody's interested.
RD Options.
Correct.
And I guess we should say just very, very briefly before we get into this heavy technical stuff here, Davis, since you're doing some overview stuff here.
Yeah.
But, there's a way for people, I think John Locke, if you look at his videos over the years that you find on YouTube and everywhere, he's really a good guy. And of course, Dave is the same. And he does a weekly recap of all the major systems. And I mean, really, the systems, you can gather them without buying the material. And he does not only the weekly video, but he also he has a bulletin board or a forum that you can join, and you can ask questions about the systems, and he'll answer them. And so perhaps Dave takes part in that. I don't know, sometimes too.
But I do. As a matter of fact, we have a couple of different, depending upon, I guess, the membership, we have various levels of, depending upon what people pay, but we have a kind of a premium membership where we offer a few times a month a kind of a group coaching. As a matter of fact, we had one last night, and it's at usually like 2 Wednesdays, every other Wednesday at about 9 p.m. Eastern time, and it's John and I both join in, and we go over. If anybody wants to join into the session, they can, or they can ask questions in advance or during the session. And so we had a very lively session last night. We've had these now running for, I guess, since about maybe November or so. And so they've been doing very well, and it's, I think people have been getting some good information out of that.
Yeah, I mean, people can participate at both levels. There are people for whom it's going to be efficient to subscribe to the program. We have a lot of other people here who are maybe very beginning options traders. They also may find it beneficial to subscribe, but many will not. And for those who will not, I would say the most we can aim for, probably, Dave, is to get those people involved in the community programs, because that is good for you as well.
And also, Don, at 9 o'clock Eastern time every Monday morning, John does his. As long as you register and you basically can join, and it's for free. You just have to join, and there's no charge. You can actually tune in every Monday morning at 9 o'clock Eastern for John's, basically he does basically a market recap, and then he goes over a M3, a bearish butterfly, a rock position, and also a V condor trade. And he basically reviews what the trades were for during the past week. And so he goes over, and that is exactly to what the courses are designed for. That's not anything above and beyond it. It's just the basic course, so that if you were to just trade per the course, that's what he goes over in those trades. And he's been doing those for many, many years, and those things are available going back, quite a few years, at least I think 3 to 5 years or so.
Yeah, so
that's all for free.
To pursue this even without spending a cent, and I suggest you do that until you feel rather than do nothing, because we can follow it at that level and at all levels with hopefully an ongoing good collaboration with John Locke.
Yeah, there's also one other thing, Don, that we offer. Is for anybody that is interested, and they may see some of this information, and they may listen to me tonight, or they may go on the website and see various things, but may not be totally in sync, or maybe they need some kind of one-on-one time. Is the only thing that you need to do is ask, and John has offered up my services for free. For a free 20-minute consultation for anybody that wants to find out more about it on a one-on-one basis, that may have questions to ask, but maybe they don't want to ask in a group session. They would rather ask, maybe one-on-one, maybe more personal questions. So that is totally available to everyone. That's free to anybody that wants to, have a little bit more information, and maybe they may not be sold on maybe what exactly they want to do. They may be looking at many different strategies or different folks to get mentoring, or potentially just how to start with options or whatever. We do offer that. So that's the only thing that you need to do is, I think, Don, did you put my email up there, dave@lockeandyoursuccess.com?
We'll make another. We did certainly before, but we'll do it again.
Okay. Well, and just to let you know, and that is also available. Just to let you know, you can get one-on-one time with me to be able to go over, whatever your individual questions, concerns are. That I'd be, more than happy. I do, a few of those every week for people that want to do that, and that's totally fine.
Thank you very much.
Mm-hmm.
So go right ahead, Dave. I'm sorry. I hope I didn't distract from where you were going.
No, not at all. And I think Don, if during the course of this, what I plan to do this time is to, this is the trade that we had started last time, and we basically went through each day. And what I thought we'd do this time, because I really would like to, get through it to its final point. What I'm going to do is do a little bit different than last time. Is that instead of going, individually day by day, what I am going to do is skip some of the days where there was nothing to do, just to be able to speed things up a little bit. And we can always go back if we have time. We can always go back if people want to see some of those other things. I'd be happy to do that. But at least this way we can kind of, because even then there is probably at least. Probably at least, I'm just looking at my list here, still about, three dozen times where we need to, or a couple dozen times that we need to kind of check in here. So, seeing that it takes a little bit of time for each time, I figured that would be a more expeditious way to kind of get through some of the material. Does that sound good, Don?
You bet.
Okay. And I say, Don, if there are questions as we go through, please interrupt me, and so I can, I'd rather answer the questions as they come up. Okay.
Yeah, let's just make sure that everybody's on board to start with, and then you just take it away completely. But
okay.
So does everyone have an idea what's being shown here on the screen? And is there anybody who see? Basically, you see this is option view software, and we're showing one long position. You probably can't see it, but in the green up there is +1, which is the calls. Option view separates out, unlike Thinkorswim, the calls from the puts. So the calls are on the top and the puts are down there. And if you know anything about a butterfly, it's +10, -20, +10. Can you see roughly those numbers down below? Just vaguely. We can't zoom, can we, David? Yes, Michael?
You identify the column name that goes above those things at least once in the session.
Okay.
Yes, exactly.
You heard it.
What is that column name?
Yeah, this column right here, so I'll give you what all the columns are here. The first column here is market price. So this is the actual price of the mid price of the strike. So for example, the strike right here of the shorts that are the 1100 puts, these are $20.80, which is right here. So that's the market price. The next column is implied volatility. The third column is existing position, so that identifies the one long call that we have up here at the 1000 strike. And then it displays down here, as Don was just saying, the butterfly, the 10-20-10, which basically has 20 shorts at 1100. And then we do 50-point widths to the butterfly, which would then give us 10 long puts at 1150, which are in the money. And then out of the money, long puts at 1050. So it's the total width here is 100 points between the longs, or 50 points each from the shorts. The next column here is, I just happen to put this in as original price, so that's the original price that was paid for it. And then delta, well, that is delta of the trade of each individual option here, but down below. Like for this down, if you can see where I'm circling with my pointer down here, down below, this is a summary of delta, and this basically says -1.12, which is basically just a mathematical computation of these positions above, the long call and the 10-lot butterfly, as we call it, which is a 10-20-10. So if you mathematically just add up all the deltas, it will come out to -1 for the entire position. So this is basically a position delta, as opposed to these are the individual deltas for each individual option. Does that make sense?
Does that make Michael, is that okay? Yeah, Michael says that's very clear. Okay. And what you're doing, Dave, is you're watching particularly those summary or total values down on the bottom.
Yes.
To maintain delta near 0, or within 50 or within 100 of 0, and to maintain Vega negative. That's basically the whole thing, right?
Yeah, and I don't know, so let me just show a graph here. What we had gone over last time is that I had a graph which basically said that there are guidelines that we look at. Basically, if this is basically where the position is right here, the black dot, and I'm not sure if you can see that on the screen, but this is basically where we are as of May 23rd, 2014. We're at approximately 1125. And then in this area outside of the tent, we basically say if the delta gets beyond -50, so if it gets to -55 or -60, we would need to do something. The limit inside of the tent, just inside of the tent, is -75, and this is delta that we're talking about. Otherwise, in the beyond to the left of this area here is a -100 delta. But eventually, as you can see, the T+0 line starts to fade off, and the delta starts to go from negative to neutral to positive, and eventually our limit there is +50. So you could see when we start off here, +50 is right about 1091 or so. There is no -100 because it's the first day of the trade, and the T+0 line is very flat, so it'd be impossible to get that, as would be anywhere along here. The other thing that we're looking for at the upper range is when Vega turns to 0. And so here Vega turns to 0 about 1166. So those are the key things that we're looking at right from the day one. Is basically we're looking when Vega turns negative. Oh, I'm sorry. When it goes from negative to positive, that's when we need to do something. Or if the delta gets to either more than minus 50 in this area, more than minus 75 in this area, more than minus 100 in the main body of the triangle, or if it gets to larger than plus 50 delta. That's it. Those are all the guidelines right there in a nutshell.
Yeah, great. Now, is anyone left behind, or as people basically, as Dave?
And these we went over last time. We had a slide that showed all those up there.
Yeah, and you can still find it. We have that presentation online if anyone needs it. But basically, the way you put it last time, Dave, is like it's like flying a plane, and you have a couple of gauges or something like that you simply you can treat it that simply, and we're just making sure that we stay delta neutral within the definition, more precise definition that Dave has given, and that we're resilient in the face of volatility implosion which might occur if volatility is high by keeping vega negative.
That's exactly right. And what we'll do tonight is go through the examples of when we happen to, one of our indicators is telling us that we need to pay attention to it, and something has been gone beyond our number, and then I can show you what the adjustment is that I made in this trade. And speaking of pilots, I actually have a good friend of mine that's actually flying in to Seattle this Sunday night, and he's a Southwest Airlines pilot, and he's another fellow M3 trader, and it's just kind of fun. We're meeting up at the airport before he flies off on his next flight on Monday, and we have a chance to get together and just chat, which is a lot of fun. So, and he's a full-time Southwest Airlines pilot, and he is also a full-time options trader. So, just these things actually do exist. People really do this.
That's great. That's great.
Okay, so let me. So just as the other thing about just starting off here, we kind of went over it last time, but I'll just quickly review. Up in the upper left corner here, and Don is again. I don't know if you people can. I'm hoping that you can see what I can see on my screen, but the upper left box here, it says 1125.90. That's actually the price of the Russell at 12:30. This is, and just so you know, this is Pacific time because I'm out here in Seattle. So this is effectively like being at 3:30 in the afternoon for you guys. And basically, I'm putting this on at approximately 20 to 30 points under the money. So in other words, under whatever the market is, which is 1125. So the location that I position the shorts would be 20 to 30 points under the money, which in this case would be at 1100, which is about between 20 and 30 points under the money. And then we simply put our longs 50 points away, either side of the shorts. And then we also purchase one long call to be able to flatten things out, and that's usually at somewhere between around a 90 to 95 delta. There's different reasons for doing it at different places, but for now it's somewhere in there is fine. So that's the basic setup, along with the guidelines that I just told you guys as far as now what we go look for as we actually go forth with the trade. So I guess without further, so is that all said, Don? And I can kind of jump in now and hopefully get the plane off the ground here?
Yeah, please do.
Okay, so we're going to advance to June 6th. And in option view, there's a little button over here which allows you to, it always takes a couple of seconds to get the trade in, but there's a little button over here which allows me to show basically what it was before we needed to do something. So it just ignores the trade that I have in here. So here we are. Now we've gone from May 23rd to June 6th, and we look down at our box down here, and delta is minus 36. Well, in any condition, that would still be okay, so we know we don't have any issue there. But the only other thing we have to look at is vega. It's turned positive. So we know we need to do something. So in this particular case, we're going to actually just roll some of our shorts here just up one strike. So we're going to take 10 of these and move them up one strike, and that will reduce our negative delta, but it will also create it will go out of positive and into negative vega, which is really what we want to be, because basically we're out here and we've gone past the point where all of a sudden where Vega is turning positive. So this is a critical portion for us. And if you click the button here, you'll see I just now have 10 and 10. So I basically just rolled. I did a vertical roll, just a vertical spread. And basically the only thing I did was I bought back 10 of the 1100s and I sold 10 of the 1110s. Does that make sense to folks?
Yeah, basically right. Because buying a vertical spread.
So what I did is, I'll show you here. I can actually show you. I did, basically I did this. So this was the trade that I put in. So this column is called trade. So this is kind of a modeling thing. So basically I put this in. And as you can see here, down here, you can see my delta went from minus 36 to minus 2. And my Vega went from 65 to minus 44. So we would now say, okay, great. Delta is fine. Vega has turned from positive to negative. And the resultant is that the graph looks like this compared to, I'll just kind of superimpose them here for you. That's the difference right there. Does that help, Don?
That's great, yeah.
So it shows basically the green line was the old position. I believe it's kind of brown here. The brown line here is, as you can see, it takes a little bit flatter, and it basically brings a little bit more negative delta into the situation. So we end up with that trade. So we basically go, as you can see here, there's the trade. We just moved 10 up, and the trade looks like this, and we are in good shape. As you can see, we're nice and flat through here. We're not sagging down into this area down here where we don't want to lose money out here. And that's a very nice position. We've got plenty of room here and plenty of room to the downside. Any questions?
Any questions? Are people able to see, understand? Great. Everybody's nodding.
Okay. Well, unfortunately, we can only go one more day here, and we find out we have another change. And again, if we look down again here, our delta is now positive, but also our Vega is positive. So this gives us another more complicated situation because if our delta is not negative, we need it to be larger negative to be able to allow ourselves to create a negative Vega situation. So in effect, what that really means is I can't move up these shorts anymore, like let's say moving up from here, from the 1110s up to the 1120, because what will happen is I'll just show you, if we go to just move these like this, I can create negative Vega. As you can see here, I have negative 80 Vega, but now I have positive 39 delta, and the trade would look like this. So you'd say, this is obviously a directional call. Or this is a directional trade now. I mean, I'm basically hoping that the trade just goes up from here, right? If we go down, we're not in a good situation. So this happens when you get to this point in the trade where basically this will not work anymore. And so what you have to do, and one of the key things that you can kind of write down is a kind of a good tip for you, is that when you see the upper longs here, which are at 1150, notice the market is here at 1174. So what's that, about 24 points above your long puts? General rule of thumb, if it gets somewhere probably like around 10 to 20 points above your upper longs, you're probably going to have to do a roll. And when I say a roll, I mean not just the shorts. I mean the entire structure needs to be completely rolled up. Because as you can see, we're just too far up here. So we need to take this entire butterfly structure and move it to the right. Okay? Any questions with that?
Does that cost you a lot?
Just what it costs you is what it basically what it costs you to pay your commissions.
So the answer is no, then.
Well, it costs, but it costs in commissions.
Only in commissions.
Correct. So basically, you would go from this position here, where basically our main shorts here, our main body of our butterflies at 1100, and we're basically going to roll this position up from 1100 up to 1140, and I'll show you that right here. So as you can see, we moved the main position up here to 1140, but what happened was that when we did this, we found out that the delta was just a little bit too high. So as you can see, as part of the rolling process, you can do that as actually part of the rolling process, or you can do it just as doing another vertical. So we just rolled up 5 of the 1140s up to 1150. And you can see our delta now is minus 14. We have nice negative vega, and we have a position that looks like this.
I think maybe, let me ask, and part of the answer to the question that was asked, that don't forget that we're gaining on the call when the market goes up. So, so we can afford a few pennies or more because we'll be gaining handsomely on the long call.
Yeah, as you can see here, we purchased the original long call for $127, and now it's already up to $173. But if you take the net of the long call and the butterfly, because obviously the long call is making money here, the butterflies are all I mean, if you take this as one complete structure of let's say a butterfly, or in this case it's a broken up butterfly, the net here, as you can see, the gain and loss right now, we're at minus $246. So the position in total at this point is down a couple $100. And I guess maybe that's a good thing to maybe say, Don, is that the profit that we'd be normally looking at this trade per John Locke is usually 10%. So that's 10% of $50,000. This is a $50,000 planned capital trade, which he normally would be looking to get 10% or $5,000. What's also associated with that is that our maximum loss would also be $5,000. So we don't want to lose any more than we could make in this trade. So those are some key points as well.
What was your P&L before you made?
The question is, what was the profit and loss before you made the adjustment? It won't change.
Before the adjustment right here, it says it was minus 146, and after the adjustment, this is minus 246, and that was basically due to the commissions.
Making an adjustment never changes the value.
Right, it's because they're...
Except for commissions, instantaneously.
Right.
You rolled up 40 points. There's always a cost of changing something. There's always a cost. There's always a risk that you'll mess up a trade.
No, but instantaneously it does not cost.
You can't instantaneously adjust. That's not possible.
Oh, well, Dave says you cannot instantaneously adjust. It's not possible, but I'm not so sure. Well, let's ask a question. Is it inevitable that you lose money, Dave, on adjustment, apart from the commissions?
No. Well, there's you get 3 possibilities. You could either be you can kind of be very fortunate and be basically completely neutral, and it doesn't have any effect except for commissions. You could go within, if you were to just simply go and take off your, if you were to take off this trade right here as a condor, be exposed to 100 delta, and then just go and try to put a new structure on. The timing of doing that, and depending upon what the market is doing, you could either be making money on it, or you could be losing money on it as well. It all depends on what the market is doing, and we have more advanced methods to be able to show you how to actually go from, let's say, this position here to this position and minimize to a very, very small amount your delta, so that basically as you go from one to the other, you absolutely will minimize any kind of P&L impact because of market movement which would be attached to having a higher delta because of going from one position to the other.
But yeah, Dave, I mean, of course you can have some slippage, but just for your information, I'm referring now to our Dave W. here, not to John Locke says he gets positive slippage overall. In other words, he makes money relative. He does better than options, he says.
I can believe that. A trader would be able to adjust to their advantage.
Yeah.
But somebody learning it.
Oh yeah, of course. You can make goof. You can do
that as a potential pain or the point at which you can lose.
But again, this is largely a delta neutral trade, so that helps too. Go ahead, Dave.
Okay, but no, it was a very good question. And I guess, you know, the key point that I'd say is that as you become more experienced with how to negotiate between going from one position to the other, excuse me, to be able to go and negotiate from going one position to the other, it does make it really depends upon your, you know, your experience as a trader, basically is the bottom line. But I know some people that will go and, you know, for instance, if they were in this position here and they will go and do a quick vertical to bring these 5 back to here and then sell it back as a butterfly, they'll sell the long call and just get out totally and then just start again.
Yeah, that's true.
So there are, because the worst thing you can do is you're starting to do this and all of a sudden the market moves very, very quickly. You don't want to take all of the, let's say, the puts off and you're just left with a long call on, because every point the Russell would move would be $100.
Yeah.
So it's definitely something that it is one of the things that we do and teach people, and how to be able to minimize the impact, and as a matter of fact, potentially have a positive impact from it as well.
Thank you.
Okay. Okay, so let's see. So we are okay. So we've rolled the position up, so we know where we are now. So now let's go up to the 18th. And now in the in-between days here, guys, that just means that none of our parameters were needed any kind of. They didn't hit any of the parameters. So now we're in a situation here on June 18th where, if you take a look at the graph, we know we're outside of the tent. And so just to remind you, the guideline for being outside of the tent is that our delta can't be any more than minus 50. So if you take a look here, our delta is minus 72. And so what we need to do is that we need to roll some of our 1140s here up. And actually what we need to do is we tried to roll them up to 1150, but we didn't get enough of a reduction in delta. So we actually then just went one more strike up to 1160. So we basically took 5 here and rolled them up to here, okay? And we brought this delta down to minus 15, and basically the trade would look like this. So we're actually, this makes us just inside the tent, but this makes it, very nice looking position. So it's a very simple move. And so I'll just show you that there's the move right there, moving it from here up to here, okay? And that's it. Simple move. So it's one, basically, two, well, actually just one vertical right there.
Oh, hang on. John?
But you moved it just inside the tent. Is there any advantage to moving it a little bit further inside the tent?
Okay, the question was, maybe move it, why did you limit yourself to moving it just a little bit? Maybe move it further in anticipation or whatever is the question.
Well, when we're here at delta minus 71, the rule is that we've got basically too much delta, so we need to get it below minus 50. So, and usually the general rule of thumb is anywhere from about minus 25 to about minus 40 or so. somewhere in that range is fine.
Okay.
Without knowing what exactly the market will do tomorrow, since none of us know, it's that is a bit of a effectively guesswork of saying that we want to reduce our delta. We could reduce it to minus 49, or we could reduce it to 0. And depending upon what happens tomorrow, we would have known exactly what that right thing was to do. So since we don't know, we kind of split it in between, and we say, we bring it back to around minus 25 or so. And that's, because remember, this is not something that we are using any kind of technical analysis for.
Okay, very good. Michael has a question.
I see where the delta changes in the bottom boxes. Is there something in the chart up where the white blinking square is, on that line or the line above? Is there something there that guides you to choose one strike up or two strikes up or whatever?
I don't know if you heard that, Dave, probably not, but
No.
the question was, how do you know, how can you judge whether to, let's say you want to achieve the particular delta, and how many strikes up to move, one or two?
Oh, sure. It's total. It's by experience and trial and error. So, for instance, so in other words, if you go up here and you say, if we say, well, okay, we're not sure really how many we need to do. Well, let's try one. Okay. All right. Well, we went from minus 71 to 66. Okay. Well, that's not enough. Okay. Okay. Let's try 5. Okay. Well, we went from minus 71 to minus 45. We're saying, okay, well, that could be enough. Technically, we're below 50, right? So we could do that. But by my experience, what I've found is that, I usually like to kind of split it. So I usually like to get it somewhere around 25-ish. But, anywhere from like 15 to 35 is probably okay.
Perfect.
And so that's why we did this and said, okay, well, if it's not that, let's go up to here. Let's just move it up from there, and that's where we got it down to about 15, and that pretty much brought us right into our zone. It's literally as simple as that. And one thing that we do also do here is these base shorts that we had here. This butterfly is a 10-20. The original butterfly was a 10-20-10. So what we do, at least at this I'll say introductory level of understanding of the M3, is that we never go less than minus 10. So when we start moving up our shorts to try to mitigate delta or reduce delta, we always leave the base one at minus 10 eventually, and then we'll keep just moving these further up here to reduce delta as need be if the market keeps on going up. But then it may get to the point like we just had back on the 6th, where we had to actually or on the 9th rather, where we had to actually roll the entire position up because it just didn't work anymore. I know that's a lot of words, but that's how it happens.
Because you don't want it to become too unbalanced.
Well, the big reason for keeping this here is that what happens if all of a sudden it comes back, and we don't want to hurt ourselves. To at least we want to have some protection to the downside.
Yeah, right.
So if we move those and we bring those up, then it basically means that our curve here will just start going down even quicker. So we want to, we want to keep some distance to the downside.
Perfect.
Okay. Okay, so we're here on the 18th. Next adjustment here will be on the 20th. And again, we're just looking at those, just like Don said before, we're just looking, being like pilots here. And we're looking here and saying, okay, where are we now? Well, we're outside the tent. And in this particular case, I think when I originally went through this, the option view software must have said that this delta was a little bit beyond 50. As every time you do this, it's it's doing a lot of calculations, and these calculations can be off, by a couple of points. So it's showing 49 now, but it was at least over 50 when I originally did this. So you just have to trust me on that one. So assume this is more than minus 50 at this point. So what we ended up, well, actually, sorry, let's see. Yeah, so we went through and basically did an adjustment. We rolled 5 of those 1150s up to 1160, which is what I can show you right here. So these 5 right here, we just moved up, and we reduced the delta from minus 49 to minus 19. And again, take a quick look at the graph, still nice and flat. And you may kind of take a look at this, and I know a lot of people will look at graphs like this and say, gee, this doesn't seem right. Or, you know, where are you going to make your money? Everybody wants to be back in here, and everybody wants to kind of be in the center of it, because what do most people like? They like symmetry. You know, we like to be in the middle of things, and we know that all this profit's back here, and we're saying, you know, a lot of people ask me all the time, well, what in the world are we doing sitting out here? And this actually, believe it or not, is in the area that I'm kind of circling right here is actually the sweet spot of the trade, because we can easily adjust to the upside as we've been showing. The more difficult adjustment actually is on the downside, because if the market makes a big move down, which we will see in this trade, then you have to, you know, Vega in this case is turning against you. So you actually, where it's completely different is that when you're moving up, when you have negative Vega, it's working in your favor, and but moving down, it's not moving in your favor. So once you get to the point where delta goes from negative to positive, and you have negative Vega and you're going down, you get 2 things working against you. So it's kind of a double whammy on the way down after you turn positive delta. And in John's course, you know, there's, you know, remember this is a quick presentation. In his course, there's, you know, many hours of presentation of the details explaining the whys of many of the things that I'm mentioning tonight. Okay, let's move on to the 27th, our next modification. Okay, here again, our delta is minus 66. We try to figure out where we are. We must be outside the tent again. Here we are. So we need to fix this up a little bit. And we simply just go and roll a few more of these 1160s up to 1170. And you'll see it right here. I just needed to do 5. And you can see I brought it down from, let's see, what was it, minus 66 down to about 28. So, you know, within that zone that I was telling you guys about, you know, somewhere between, you know, 15 to 35-ish, you know. And, you know, to be honest with you, I tend to, with these numbers, I don't like to do 1s or 2s or 3s or 4s. If I can do it, 5s is nice, because it also makes it easier when you want to take the trade off. Okay. If there's no questions there, I'll go on to the next trade here. Just a couple days more.
Could he would the graph of what now? Of the question is, could you show the graph of what you just did?
Oh, sure. Oops. We'll go back there. And here is, let's say, let's make sure this is, okay, that's the adjustment.
Yeah, that'd be interesting.
And here's the graph. So as you can see, we're up a little bit of money now. And we're just kind of hanging out here. Nice and flat, very, very safe, right? You know, quite a bit in either direction, too. Is that okay?
Yeah, thank you.
Okay. Let's go up to July 1st. And here we got a situation where, let's take a look at where we are first. Okay, so this is interesting. So now we're, notice, this is actually a key point, because let me just go back for a second here. Remember, we started this trade at 56 days, I believe, to expiration. Now we're at 17 days. So we're getting pretty darn close. So we've been in the trade for what? Close to 40 days?
Yeah.
Okay, 39 days? Okay. And you notice how the graph starts to, you know, look a little bit, you know, it's a little bit more sensitive to movement. And you can see that the, you know, just just the kind of the shape, the shape of the graph tends to start to, the T+0 line starts to really be getting a bit wavy in here, right? And that starts to happen when, remember, as time grows nearer to expiration, the T+0 line wants to, it wants to drive up and up and up towards this eventual curve right here, okay? So it's going to get, it's driving up more and more and more, and it's getting more sensitive, and fluctuations in price are getting even more sensitive. So that's why a lot of the reasons come into play now, where maybe through the first parts of the trade, you look at it and you say, gee, it's kind of like, watching the grass grow. Now it's getting a little more exciting now. So in this particular trade, we had, what happened here? We're outside the 10, but look at our Vega. It's up to positive 93, okay? So we take a look at this and say, well, remember what I mentioned to you before? How far is the market past our longs up here? The market's at 1208. We're at 1190, 18 points. I know for a fact that this delta is not enough. It's not negative enough to be able to counteract this huge positive Vega down here. So the only choice that I have at this point is to take the entire structure. Remember, I'm not doing anything with the long call, so I'm just dealing with the puts here. I have to take and basically roll all of these positions up from the base shorts here from 1140. We're going to move them up to 1170, and all the everything along with it as well. So if you look here, now we're based at 1170. We still have our longs 50 points apart, just like before. But to correct delta and put it in the right place, we had to put our shorts here up 30 points away at 1200. And the reason for that is to be able to create a delta situation that will be basically, within the guidelines. So we know that when we're in this area of the graph, remember we're usually in around, we should be somewhere between 0 and minus 75. We correct while we're doing the modification, while we do the adjustments. For instance, if we would have gone and not moved these here and we would have had them back down here, okay, this is what it would look like. Okay? Not good, right? Anybody? Hopefully I get some nodding in the head.
Anyway, yeah, because... Say again, sorry? You're saying what does the delta look like on that one?
Yeah, delta on this would be minus 217.
Thanks.
So it'd be minus 217, and we're basically right in the zone here. And we say we can't have any more than minus 75. So during the process, I actually went and tried, and I said, okay, well, maybe not. So if we didn't have it here, how about if we tried it here? Okay, well, now it brings it down to 138. Well, that's a little bit better. Okay, here's the graph. Oh, okay, it's looking better than before, but, we don't like this area down in here at all. So then basically we're basically robbing Peter on this side to pay Paul on this side. Okay, we're losing some of our T+0 line, if you want to call it hump, on the triangle side and underneath the tent for over here. And you'll see again that if I just get rid of those and go back to our real trade, which is here, you can see that now we can have a T+0 line that does not cross the x-axis. We don't have this nice big hump up here anymore, but we needed to do that to be safe on the upside. And we just went within our guidelines that said to do it within about minus 75 in this area. And that's what we did. We got it down to about minus 38. And, there's a big part. That's why we like this software, because you're able to go in and check this and see if it, really makes sense. Any questions on that one? That was kind of a big move.
Any questions on that? I don't see any.
Okay.
Oh, there is one. Michael?
Well, at some point, will it be possible to see how one up with these moves, TOS?
Well, I'm going to show TOS.
Okay.
I'm going to show in TOS.
Was there a question about Thinkorswim?
Yeah. Well, Michael was just saying he'd like to see some of this in Thinkorswim, and that's what I mean, I guess you could do it too, but I've prepared some examples where we'll show this. I mean, it's more difficult in Thinkorswim because it's the think-back capability is not as powerful, but it's...
Well, we can look at it when you get...
Okay, we'll come back to that.
Okay. Yeah, and the looking at this in option view versus Thinkorswim will always be a little bit different too. I guess that's the easiest way to put that. Okay, so let's move along. Let's go up to July 7th. Okay, we've got a situation here where we got 106 positive delta. So what's happened? The market went down quite a bit. And so now we're in this kind of a situation. So remember our last time we looked, we were up right around here. So now we're all the way down here. So remember we just, throughout this trade, we're constantly being challenged to the upside. Well, now we've come back, okay? So one thing to note is that, at this point right here, we're beyond our plus 50 delta. We're now at plus 106. Vega is no problem, okay? We are up about $2,400, okay? But because of where we are, we need to do something here. And what do we need to do? We actually now, as opposed to, remember, all the work that we've been doing so far is to go to the upside. Well, now we have to kind of reverse gears here, and we need to roll this down to 1150. So we're basically going to take the base component here, which is at 1170 with its associated 50-point longs. We'll move it down to 1150, and then we will place the other shorts. We'll play with that until we can find the correct place to put it, whether it be at 1150, 60, 70, 80, or whatever, to get our delta in line. In this particular case, the shorts got moved down to 1150, and the other shorts, these guys right here, only had to move down to 1180. And I can show that to you right here. So you can see the whole thing got moved down to 1150, and just like I went through the example before, we usually we have to kind of try it here, and eventually get it to the place where our delta is in a number that's okay.
Sure.
In this particular case...
Did you move the long?
Yes. I can go back and look. The longs were at 1120 and 1220, and now they're at 1200 and 1100. We moved everything down 20 points, and then we moved the extra set of shorts here we fine-tune that to where we would have an acceptable graph and delta position that would look like this. Okay? Very similar to like we did before. We basically brought it in here. If we would have taken this delta here and didn't put it here, and we just put it right here, and just did a straight butterfly, we'd end up be looking like this. Okay? So as part of the analysis when you go through the trade, you have to figure that out in advance. And then we figured out that it needed to be up here. We got our delta in line, and then we created a trade that looked like this. Much more, much safer.
Michael?
Okay, back on the tableau of numbers, there's a pink background and a blue and greenish background, white. Is there a key to that?
And Michael's question is, what does the blue versus the...
Yeah, it's right here. This button right here where it says, it shows standard deviation shading.
Standard deviations.
It's standard deviation.
Of the of the strike, I guess.
well, no, it's from, no, from 1187, okay, just like I can show it to you on the graph. See down below here, these stripes down below? I believe that you would call this magenta, I believe, would be, this is one standard deviation right here from where the market is right here. And the teal color here is 2 standard deviations. Okay, and that's what this is also showing you here. This is one standard deviation here. The blue or teal or whatever you call them, that is 2 standard deviations, and white is beyond.
There you go.
And if you don't want to see that, you just click this button and you do that.
We're all learning option view here. Any other questions on this, at this point, at this? No.
Well, just.
Yeah, Michael?
We're all learning option view here, and since Locke and company are presenting in option view, this sort of background is helpful.
Exactly. And not only that, but we'll try and hold Thinkorswim to some of the same standards when we get to that. Dave?
The standard deviation, is that like a 30-day, or what is that? Notice it's different.
Yeah, what is the 30-day model based on in terms of days?
What's the standard deviation?
Say that again, Dave?
Standard deviation based on?
Let's see, standard deviation.
Is there a question, Don, or I'm not sure?
Even number of standard deviation. So what is the history that they're using?
Is it based on historical volatility or implied volatility?
So you want to know the derivation of their formula for standard deviation?
That's what he's asking. Whether we can answer it.
I have no idea.
We don't know. Okay.
Yeah, I have no idea.
I would think it would be based on the current model that's being used for all the prices, which is all being based on implied volatility. I mean, nothing is being based on historical volatility.
Yeah, I believe it's just implied volatility. I mean, there's many things factored into standard deviation, but if you're asking specifically about volatility, I believe it's implied volatility versus historical.
I'm sure it would. Otherwise, it would show all sorts of anomalies.
Right. All righty. Let's move on. Let's go on to the 8th here. And this is a very interesting kind of day. So here we're on July 8th. So as you can see here, we've got 10 days, this right here, it says 10. So this is 10 days left till expiration. And right now we're right at our max, pretty close to max delta here, about 50. Here's what we look like. So I would call this position kind of aptly named, kind of almost sitting on top of the ball, meaning either direction, it's kind of, it tends to be, you're at almost maximum gain today. Anything tomorrow, up or down, will probably be, less than what you're doing now, unless you get a nice change in pricing from the market makers. So because of the position that you're in right here, you've got many things that you could be doing. One of the things we take a look at is saying, well, gee, our profit level on this is, prescribed to be 10%, but we've only got 10 days left to go, and we're up a little bit over 5%. We're at about 2,700 right now, and that gain and loss includes $255 worth of commission costs, so we're up, that includes that. So we're up about a net of $2,700. So, there's different things that you could do right here. And you might ask, say, well, Dave, what are the various things that we could do? Well, number one, we could what? We could simply just take the position off. We could just say, we're up a little bit over 5%. It's been a hell of a ride for 46 days. And maybe that's what we should do, and that is an option that you could do. The other thing is, obviously, there's always the option of saying, stay put, don't do anything. Or the third option is because we're at our limit of delta at plus 50, we could go and roll it down. Okay, we could go and take our whole structure again and move it down probably by another 20 points or so, down from 1150 down to 1130. You know, obviously, if we knew exactly what the market was going to do tomorrow, we would know exactly what the right option was to do. But for demonstration purposes, what I'm going to do is actually just stay put at where we are right here. I believe that's what I'm, let me just double check. I believe that's what I did right here, is just stay put. And let's go on to another day and see how we make out. But knowing that all those options are available to you at this time. We could roll down, we could take it off, or we could just stay put. Because, you know, technically, we're not at our 50 delta. So, you know, we could make the argument that we don't have to roll down. So let's go on another day, and let's see what happens. Let's take a look at the market. Okay, so what did the market do? It went up 1 point. But our gain and loss jumped up by quite a bit, okay? So, unfortunately, we're sitting here almost in the same predicament as yesterday. Again, we're sitting on top of the ball. We've got a couple more shekels in our pocket, and the same situation exists. We could either take it off, we could stay put, or we could, in this case, now we would not roll it down because we're at a delta of about -4. So, you know, the option of rolling it down in this case is, you know, we could do it, but by definition of the guidelines, it isn't something that we would do. So here's a situation where you could go and we could take off the trade, take our $3,500, which is, you know, getting close to around 7% or so for whoever wants to do the math, but, you know, somewhere around 7%-ish. We're not quite at 10%, but, you know, we're there. So in this, again, for demonstration purposes, let's go and keep going, because I know everybody's at the edge of their seat wondering what's going to happen the next day. I can sense that even though I can't see you guys.
Well, it's certainly interesting because people like expiration plays too, so.
Well, and okay, so here's, now we go to July 10th. The market's down about 10 points. Our delta is now -29. We're up now about another little bit here. So we're up at around about 8% now. And so what do? Well, we got various things that we could do. You know, the decisions are, well, what's first and foremost? Okay, we're 8 days till expiration. And actually, let me do this. Sorry, I showed you my hand here. So we're sitting here at 124 delta. So our delta is over the limit. So what do we got to do? Well, we got 1 day to go before our expiration week. We're here on Thursday. Next week is expiration week. We've got a plus 50 delta adjustment, okay, because we're now at 124. So we could either do a couple of things. We could exit right now with the profit that we've got. We could actually go and roll the whole position down per the normal M3 rules, okay, which would be like rolling it from 1150 to 1130. And when we do that, give me a second here. I'm just looking at my notes here. Okay, so let me show you what we're going to do here. So we actually rolled it down to 1130. So we're making the decision to keep in the trade. We're gonna keep going for trying to get to our target of 10%. There were some options of where we place our shorts here, okay? And so there's various places, and you know, there's details about how much where we move each one of these and how much delta we have. But suffice to say, this is where we ended up to place the position that looks like this. So we rolled it down, and we got it to be relatively flat. And the reason we got that was because we moved the shorts, the main ones, remember I told you, we always keep 10 at the bottom here at 1130, and then we moved some right up here. And that created a delta which was relatively flat. And still got negative vega. We're up nicely. And again, we're sitting right at the top of the tent. Now, remember what I told you before, is this is also a great time to exit. Because, you know, only if the market kind of hangs in there really nicely, if we have a large gap of, you know, 30 points or something, we're not going to be too happy. So those are the risks. Any questions there?
No, no questions.
Okay. So what I continue with is the path of the M3 roll down to 1130 with shorts at 1130, 60, and 70, and our delta here at about minus 20, 29 in this case. When I did my notes, it was minus 21. But anyway. So what do? Let's go off another day. Okay, so now we're here Friday, a week before expiration. The market had no change. It was just down less than a point. Our position now is up $5,000, which is at our 10%. And this is what it looks like. We're sitting right up on top of the ball. And we've been very lucky in the sense that we've continued on with the trade to get to our profit. But as we know, any step along the way, you know, we were totally at the mercy of the market. So one of the things that we could do here is obviously we could take it off for 10%. And if you had looked before at the couple of different options of where we placed the strikes up here, there were places that if we would have done it one way, we would have been just up. The way we did it, we were up $5,000. If we would have done it slightly different, we could have been up over about $5,700 or $6,000, depending upon how we moved our shorts around. Okay, so this was the most conservative way, and it made the least amount of money, but it did get us to our profit level. So, Don, this is up to you. We've got 4 more days to go, and not sure how much time we've got left here, but basically this would be the end of the trade normally, because it has met our profit target. We do have a week. We do have, you know, the next week, Monday, Tuesday, Wednesday, Thursday, and, you know, if there's anybody interested, I did trade it through then, but if you want to stop here, we could do that, or we could, you know, bring it right up to the last minute of expiration if there's anybody that's interested.
No, no, go ahead, you know, by all means.
Okay. All right, very good. Okay, so let's go to Monday. We're coming down the home stretch. And here's a case where, again, our delta was up to minus 160. So we're in this kind of a scenario. Okay. Make this a little bit smaller so you can see it. So as you know, getting into expiration, it's getting a lot more curvy. So our delta is minus 160. We need to do something. So we needed to roll basically our 1160s up to 1170 to compensate for that. And it would look like this. So we just roll them up to here, reduce our delta to minus 53, and here we are here. Just flatten it out just a little bit. Okay. Go on to the next day. Notice the market was only up about 5 points this day. Let's go to the 15th on the Tuesday. And here we are. The market went up about went down about 11 points. Okay, our profit is up to about 6,700 now. But our delta is more than plus 50. So believe it or not, yeah, we're going to actually roll down again. So we're going to take our 1130s and actually move the whole structure down. So we've moved it down to 1110. And to get the deltas actually in line here, we actually had to do kind of an interesting adjustment up here where we actually had to go up and move our shorts all the way up, but then even then it didn't work. So actually we had to step on some of the longs up here. So if you can see, what we actually did is that we, this would be a little bit hard to show you, but you can see that we basically took our minus 10. We normally would have like minus 10 here, and this would be plus 10. Whoop. And we'd have plus 10 here. That's what it would have been normally. But when we did that, it didn't. The deltas did not work out correctly. So we actually had to take, effectively, we had to go and step on the longs with our shorts, if that makes sense to you guys. So in other words, we're in this position right here, and we actually had to buy back 3 of these and sell 3 of these, which resulted in 7 and 7 over here. Does that make sense, or is that really confusing?
Yeah, go ahead and put on the 33 there so we can see what the Greeks look like.
Okay, the question was, go ahead and put on the 33 so that we can see what the Greeks look like. Before.
Sorry, Don, to do what?
Say that again, Ryan.
Could you just do -3 and +3 right where you are?
Could you do -3 and +3, he says?
Oh, sure. So this is what it would have been before the trade. And you can see this is what you would end up with. Okay. And so that would have given you a delta of about -114, which would have been unacceptable. So that's why we just went and stepped on these.
Okay.
And got the delta down and created this kind of a line. So it was just it was just a method of being able to flatten it out a little bit. And one of the consequences of doing this, or one of the nice things, is that as we reduce our longs, we actually take this expiration graph and that starts to come up more because of that. So we reduce our risk even more on the upside. That's a little bit more of an advanced technique, but that's an expiration week. That's what you need to be doing.
Interesting to see it.
Yeah, a little bit more of an advanced technique that does not usually get taught in the main course. So let's go on to the next day, to Wednesday. So let's see what the market does for us. It does nothing. It just goes down less than a point, okay? But again, our delta is up to -111. So a little bit too much for where it is right there, as you can see. Okay. And I know looking at this curve, you say, wow, this is really getting quite crazy. But that's expiration week. So what I wanted to do is just trim that a little bit. So what I did is I came over here and just reduced this by 1. I basically just rolled another one down. I just brought it to -79. And it just flattened this out somewhat. Okay. This is a questionable call, whether you want to do one of those or 2 of those. It's a judgment call. Just for informational purposes, I usually tend to like to have a little bit more of a hump on the back side of me here, just to protect against big downward moves versus an upward move, because here my risk is much lower because of, as you can see by the expiration graph. So that's just my own personal sentiment on that. Okay, so we're on Wednesday, and now we're going to go into Thursday, which is the final day. And what I'm going to do is I'm just going to go. I'm going to go a couple of hours. Just look at it a couple of times during the day. So here we are. We're down a point, but the graph is looking like this, and I'm not liking this area in here. And not liking it is obviously a judgment, but I look over here at my delta, it's -107. Say, well, that's just a little bit too much. So let's get it back under about 75 or so. So I bring it to a little bit less than that, and makes the trade look like this, just flattening it out just a little bit. And let's go to 9:30. See what happens. We're at 1150. Now we haven't jumped down about 9 points. Okay. We're up about 8,000. Delta's +16. We're looking like this. Okay. and we're fine right now. So there's nothing to do. So now let's go just another hour. And this is typical of trading in the last day. You'd have to be looking at it this many times. Okay, did an hour, nothing too exciting there. Didn't really do too much. Let's look at another hour, 11:30. Okay, now we're down 11. Still, our delta's plus 32. Check the graph, we're still okay. And now let's go to the end of the day at 12:30. And now we bumped up to plus 83. We're looking here, starting to head down this line. Well, we're a half hour to go. It's, sorry guys, it's time to, the party's over. So, we end up the trade when we take this whole thing off. We ended up the trade. I can look over here. Let me just go to here. And I'll show you in the reports. We made about $7,300 or so. So 73.76 divided by 50,000. That's about 14.75%.
Wow.
So there it is, gentlemen. Questions, comments?
Yeah,
luckily you can't throw fruit at me.
Great presentation. Thank you so much for this. So I saw that you never adjusted your call whatsoever, and is that typical that you never have touched that guy's entire?
The question was, I noticed you didn't, Ryan says he noticed you did not adjust the call. Is that frequently the case?
That is very frequently the case. It's only by rare occurrence that I end up usually doing anything with the call. And part of that reason is the call is a very expensive thing, and the effect of also slippage, as somebody was mentioning before. What happens when you try to make trades? What I found is that since it is a deep in the money call, it's a very, very expensive option, and the bid and ask is usually quite large. So you really have to be careful, and so the least amount of times that I have to trade it, the better off that I like to do.
All the better. It keeps it simpler. Michael?
In taking off this multi-leg trade, do you do it one leg at a time, or do you pair things together in one way or another?
In taking it off, do you do it one leg at a time, or do you take off spreads?
Well, great question. I actually just a week ago I developed a bit of a procedure, and actually did a presentation on John Locke's website for folks there to. It was based upon actually experience that I got both working with my son and my daughter. In between football games one Sunday afternoon, doing some back trading, and we basically went in and looked at many, many different ways of how to either minimize delta by rolling, for entering a position or exiting a position. And so, so there was there's very eloquent ways of doing it, which is basically what I described in my presentation. Or there's kind of the brute force method, which is, going in and, taking off a whole butterfly if you have it, or a whole condor. But the whole big thing is you want to do it to minimize risk. So many times it's going in and taking pieces, pieces of it. Unfortunately, when you have one big long haul out there, doing it in pieces sometimes is a little difficult. So it does require some expertise to try to minimize your delta exposure. If you're not worried about delta exposure so much, what I normally do is, if it has to be done quick, or if it gets down to it, usually I try to limit it to about maybe to the delta exposure of one long call. So if I have a position on that has, let's say, more than one long call, I'll usually always go basically kind of back and forth in the trade, doing some negative, some positive, and you basically take pieces going back and forth without going through a huge amount of detail. You know, it's basically, you know, you take a little bit of each and you go along until you can actually, you know, the whole big thing is to keep your trade safe while you're trying to get out.
Sure.
And the best way that I know about doing that is keep your delta low.
Try and keep your delta even as you take.
Yeah, so you can be doing vertical spreads, you can be doing butterflies, you can be doing condors, you can vary the quantity that are in each, and you could vary which ones you're taking off, all in an effort to try to minimize delta.
Super. Now, are you gonna? I'm gonna show some Thinkorswim stuff. Are you gonna? Do you have to go, or do you want to stick around, Dave?
Let's see. I got to check the time here. No, I've got a little bit of time.
Okay. Well, if you don't mind, then I'll just do some Thinkorswim stuff, which maybe I won't comment any further. Let's just try it. Dave, could we show the Thinkorswim on your machine?
You want to grab the presentation, or do you just want me to show it?
Just a Thinkorswim live on your machine, please. And you may as well see if you can manipulate. You may not. It may be hard for Dave because I haven't ever shown him this before.
Drive it.
Okay, he wants me to do it. Okay.
If you want to tell me, I can try.
Yeah. Could we? So this is, well, first of all, I should explain what we have here for Thinkorswim. I am not a Thinkorswim user. Really much, except that it is free and a large majority of our members use it. And I know that the reality is that most of our members are not going to go out and buy OptionView right away.
Excuse me, Don. Are you going to share your desktop so I could see it?
Oh yeah, Dave, could you share it, please? Sorry, I forgot to mention that.
Yeah, it's these guys out on the West Coast. You can just kind of forget about us out here, right?
I'm so glad you mentioned, because I had that in mind and then I forgot. So let us know if it still doesn't show up in a second or so. Does it show it?
Not yet.
No, it doesn't. Do we make ourselves a presenter?
Yeah, you just took the ball, so that's the first step. Now you have to, somebody needs to share their screen.
Okay. So, can you see it now?
Okay, yeah, it just came up.
Okay, great. So, for people who are more familiar, they'll already understand all of this, know all of this. But now what we want to do is, Thinkorswim has great, very adequate capabilities for modeling the risk graph if you're trading live, or you're projecting forward the current market condition and looking at various situations as to what happens when that happens. However, for purposes of what we're doing today, we wanted to be able to duplicate, or at least imitate, might be a better word, some of Dave's trades in this particular expiration month, which is in the past. So we have to use think back mode for this for back testing. Now let's see. It did pick up the dates here, 6/27. Let's go back to back to May 23rd, I believe we entered.
Yes.
So we go back to May 23rd here. And down here, there's two places you enter the date. We're in think back mode here. If you go, and it's even, there's a sort of a bug, you can't really select it here, analyze. Once you're in any aspect of analyze, you're stuck in it, unless you go over here first and then come over here. And then you can select, well, let me do it, what the heck. And then we go over here, analyze, and now you can go into think back mode. again, think back the backtesting mode of Thinkorswim as opposed to simulated trades, which would be doing trades now based on the current market, but projecting forward. The environment is much richer for under this add simulated trades choice, but it simply doesn't allow you to go back in time. So to go back in time, we have to choose think back here, which then does have limitations. So I was mainly focusing here on ways to get around the limitations, if there were any. I wanted to see if it was even feasible at all to do this. So you've got two panels here, and we can set the date here. And it's sort of amusing because you would think you would only need one date, but to their mind you need two. So here your basic date is your date that you're first and foremost looking at is May 23rd. And for our back trades, we also need to set that to whatever date we want to look at.
Yeah, that's the P&L date, basically. Right.
So it is. So we can go to the 23rd here also. Could you hit 4, please?
Sorry.
Thank you.
What do you want done? 6.
No, I'm there now.
That's February.
6/23. Most of the time, it pays to put them the same. Otherwise, you'll find yourself confused. Pardon me? Oh, it should be. I said it wrong, David. My error. It's 5/23. Thank you. So now, what I found is, and I'm going to shortcut this a little bit because we're going to run out of time. Is first, I don't need this panel at all. So what I found, well, first of all, just to keep it so we can see something, here's our long call. So we buy this right on May 23rd, 2014. And we also buy on May 23rd our butterfly. So here are, now I'm not going to show you the mouse clicks because that would take another 5 minutes and we'll never get through this. But basically what I found is if you put in a butterfly, you will have 3 legs here. I put 4. How did I get 4 in there? It turns out you cannot modify the trade. In other words, if you put it in with 3, which if you click butterfly on their menu, they will give you a 3-leg trade, and there is no way to modify it to be a 4-leg trade when you want to split your strikes in the middle. There is in other areas of Thinkorswim, but in this particular area, there is none. If anyone finds one, by all means, call me a liar or prove me wrong. I tried everything possible. So the thing to do is to enter it as an iron condor and set the 2 middle legs the same. That way you can have 4 legs. And 4 is the maximum in Thinkorswim. Okay, where am I getting that? Oh, that's great. So that's a trick, because if we put it in like this, along long 1100 and 11. Let me find the longs here. Long 1050 and 1150, and 2 short 1100s. In terms of lots of 10, that'll make it easier later when we want to split it up. That's all. So make it an iron condor and customize. Just change this to custom from butterfly, and you can do that. Now, if we enter these 2 positions on May 23rd, our initial profit will be 0 on both of them, because we just entered them, so it's just sitting there where we are. Now let's step forward day by day, and okay, so here we go. May 24, let me see. If you notice now we're developing some different values here for the data delta. And we're minus, and we're, okay, now it is showing up. And we have some profit and loss developing. The delta minus, so what is the delta of our overall position here? It's close to 0, correct, because I'm maintaining them separately. You might think, well, we'll put them all in one, and you could do that as long, because we have one tray, we could combine these two middle legs, but it's just as easy to leave this one, so that, because that leaves us with the 4, full use of the 4 for purposes of maintaining our, adjusting our middle, our short legs later.
Hey, John.
Yes.
Could you show the risk profile of that?
Yeah, that is what we can do.
I mean, just click on it to be able to show the graph.
So I think what
you cannot do that in Thinkorswim in back test mode. However, you're right that you want to see it. I researched that. I found 89 people who say you can't do it. So I didn't just go by my own experience.
What happens when you click the thing up above that says risk profile?
Where is it?
Right under where it says scan.
That only applies to your current position or your simulated trades, which are a whole different set.
Oh, okay. I'm sorry. That just takes you out of ThinkBack. Okay.
Yeah, no, okay, we've had it. Some people in the room, which I'm very happy with, are confirming. So, because that means, I'm glad to hear that people have been working with this stuff. So, Dave, could we go to the remote access to my, well, no, let's go, now let's see. Yeah, let's go to the remote access to my system if we can. Okay, let's get rid of that. So here is a tool you can use, which is Hoadley. This is what you're going to have to use if you want risk diagrams and you want to do back testing in Thinkorswim. There is no other way, period. And it's good because it costs free. It's free for a limited version. Which isn't, however, completely adequate to showing all. But I simply copied those same legs. Now let me see which one this is. This is, does that say?
Looks like that, John, it looks like that might be the wrong month because it's only 27 days to expiry.
No, I know. We'll get the entry here. So here we are with 55 days to entry. What is the date here? It's okay. Yeah. Where does we've cut off the right portion of the screen, Dave. Is there? Oh, I guess I have to get it down here somewhere. Is that right? No. Can we? Is there anywhere we can get the? Oh, now pull it. Thank you. No, it doesn't make any difference. No, that's within Hoadley. Oh, actually, you might be right. You might be right. What am I saying? Thank you very much. No, that was a good idea. I apologize. So, we're missing the top of it. 23rd of May. There it is. There's the date. So there's your risk diagram, and now I'll show you in Hoadley what you can do. See, now here what I did, well, for now this is just entry. Here's the call, here's the long call, and here's the puts. And I actually found that the values accorded quite well with the values in Thinkorswim. Here we're showing net. option value, debit, credit. Here, this one got blanked out. We want to look at position delta. And here you see that our total delta is 0. Now, the values here, in option view, they multiply this value by 100. These values are the same for the individual legs. But if this were option view, this would say 3 instead of 0.03. Each side, I'm sure, thinks they're they're being more logical. So, and you can also show the delta on here. Delta, where is delta anyway?
Second one.
Second one, thank you. So, so there's delta. And actually, if you start to look at these, you can learn a lot. And so delta, and we can also look at vega. And here's our, now let's look at vega up here. But you can also see the vega of the individual trades, of the individual legs, which is more than you can see in Thinkorswim. At this, you can't see this in Thinkorswim. And you also can look then go back to the position vega, and we see that it was a similar number, and it's a little different. It's a similar number. This would be 394 minus 394 in Thinkorswim. Now let's go forward here. Let's stay here for a minute, and let's go. How did we do that? Oh yeah, we went over here. And oh, that's too far. You can see all the numbers too, if you want. That's more or less, this is like the bars that are underneath, or rather the table that's underneath in option view. So that you don't really have in Thinkorswim, because they don't have the risk graph at all. So in backtest mode. Anyway, so let's go forward now, and you could actually do this in sort of either Thinkorswim or Hoadley, because Hoadley also, you can run this forward, for instance. You could do, well, first let me show you, switch to table view. So there's your values if you want to see, and you can say show Greeks on analysis date. And so here you have all the Greeks across your horizontal axis. And again, you don't have that in Thinkorswim in backtest mode. So it is a nice compliment. It's $120 if you want the full version. $125 one-time cost. Hoadley? Hoadley. Just search on Hoadley options, and you'll find it. And so let's go forward, though, and let's go forward because really we don't have any action yet, do we? So let me go back. Well, let me do it here while we're here, I guess. So I've saved a number of scenarios here. So let's go.
Don, just let you know, June 6th is the first date that we needed to do something.
Yeah. So here's June. Is that June 6th pre? Yeah, June 6th pre. So let me just see here. Oh no, this one here. No, this. Let me see about this. It might not be correct. Is that correct? Hardly, right? No, I think it is. We just, well, let me see. Recenter it. That doesn't look right. But let's look at. Oh, is there? I think I did two of them. Let me see if I can read that.
Let's look at June 6th post because
maybe that one is an error. So June 6th post. So this is after the adjustment. What have I done here? Notice I split. Here's your split, Dave, of the. I just duplicated your trades for the early ones. And so now you'll have to type the there's two ways that you'll have to, either you can use a round volatility like 20% and put it on the settings tab down here. Or you can, I've been copying in the implied volatilities from Thinkorswim. Or you can copy in the prices and it will compute it for you. Or you can import all the data if you have it from somewhere, and it will use option price and volatility. But we don't have any data necessarily. You can get it can download the price data, the closing price daily from from Yahoo, but it can't download the individual option strikes. It doesn't have that in its own anywhere, but it can synthesize it, which you might not do that badly. It would be actually the equivalent if you run it, but it'll be different. So I tried that and I found it wasn't satisfactory correspondence with Thinkorswim, because these out-of-the-money calls and puts go to strange volatilities, and so you'll get quite different deltas and vegas if you do that. What time is it? Oh, already late. Anyway, so but you can see that. Let's go back to Thinkorswim so that we don't totally neglect it, if we can, Dave, please, on your machine. And so what you do, okay, so then we go forward here to the 6th. And there, what happens here, what you have to do, it shows that the profit, that's 39.45 and 34.25. So what is our profit position on June 6th according to this? Yeah, about $500. And now what I do, but we want to adjust here. So on June, okay, so here on June 6th, we split the strikes here, 1100, 1110, which is Dave's trade again. And we close. What I do is I re-enter the position. In other words, you can put in a whole bunch of spreads here. This is just one way to do it. There's a completely different way of doing it. But to make it look easy to read, to me, it's much nicer looking at your net position here when we readjust, after adjustment. So I re-enter the position and I close out this trade. It's just the same thing as if we simply did that. We simply closed out this trade completely and open the new one. So, but what we have to do is make a note then of this profit at this point, and I'll show you a spreadsheet in a second that does that, and reset the profit to 0 for this new trade. Treat this as a new trade, and now this, however, won't go away. There's no way.
Well, you can clear the check on the left.
It doesn't make any difference in what shows here.
Right. You can make it go away with the X on the right.
Oh, you can, but I don't want to destroy my workspace. I want to keep my workspace so I can go back and step back and forth through it and make different adjustments and see what happens. So I simply leave it here and ignore it. Isn't that easier than deleting it and having to re-enter it if you want to use it again? So simply ignore this now as we go forward to June 9, which is the next one. And now, although this is showing profits and losses, we don't care about that anymore because we're now looking at the dates, the ones that were entered on June 6th as of June 9. Because our current date here is June 9. So I'm just, really this is bookkeeping. I'm just showing you bookkeeping. But it's something you have to deal with. Somehow or other, you have to be able to compute your profit. And somehow or other, you have to be able to see your trades. You can't just put in the deltas. It doesn't have what Option View has where those buttons, you click it and it shows you before and after. And then, as we go forward, because I'm running out of time, a little bit, not too badly. Well, we'll leave some time for some questions. Yeah. Okay, June 6th is that, entered June 6th. So now let's continue on. Let's step forward and look at our deltas here. Our delta is minus 78. It says here. What is our actual delta? Overall delta. Because I'm not closing out the long call. I'm just leaving it there because there's no point. You know, it's nice and convenient to leave. So our net delta is now about 22. So that's within range, so that's fine. And our vega, the long call does not have any significant vega because don't forget it's a surrogate for a long underlying, a long stock position. And long stock positions, most of the Greeks are 0. So therefore, it's not too bad to do this because it's not as if you have to add together numbers. Most of the time, the only delta is going to be 100 or 1 in another. So you just have to say that this is a 20 delta, 22 delta, and vega is minus 50. At least it's still negative. Well, let's go on to the 11th, and this is 20 now, right? 100 minus. Do people see what I'm saying? Yes.
Just a quick note. When I went through mine on June 9th, we actually rolled the position up from 1100 to 1140.
Mm-hmm. See, here's where we enter it, Dave. The trade, I'm just looking, it doesn't matter. Yeah, I'm just looking at the June 6th position as of now because it isn't, oh, hang on a sec. Oh, I'm sorry.
I thought we're on June 9th.
I'm looking at the wrong position. Let me just see, as we go back to the 9th.
Yeah, I didn't hear you mention that you had rolled the position from 1100 to 1140.
No, you're right. I didn't mention. That's what we do. Here it is, though, June 9th. It's just progressive each. I guess when I was pointing at June 6th, I was saying this. We're ignoring this now. Oh, we should. That's what I should have said. Yeah, we're now looking at the position we had. Since if we're looking here at June 10th, then yes, we on the 9th we went back and we rolled on June 9th. This is a trade we entered, which now does have your roll.
So do you know when you look at this, like what your Greeks are on June 9th before you did the roll? Or you can't,
Yes, you do, because it's back on the June 6th.
Well, no, but we're talking about June 9th.
I know, but no, what I'm saying is it's back on the trade that is marked as having been entered on June 6th.
Okay, but it's showing the Greeks from the 9th.
Right. Yeah.
Yes, exactly. Well, it's showing what that position held until we did the adjustment. And on the 9th, whereas the one on the 9th is showing, as we go forward now, on the 10th and so forth, it's showing the Greeks now. This one is now irrelevant and wrong because we've stepped forward into another version of our butterfly trade, of our butterfly, I mean. So that's the basic idea. Let's see, June 9th, at minus 92, that's an 8 delta, which is certainly fine, so far. But as we keep going,
and Don, just as a point of reference, The Greeks, as everyone should understand, the Greeks that are in Thinkorswim and the Greeks that are in OptionView are a little bit different.
Well, they can be, but some people have said
they will be.
Yeah, they can vary, but you see, what I tried to do, there's a couple of different models up here you can set, and let me just see.
Yeah, it's under application. It's under application settings.
And look and feel, and these are not actually affected. I found in. Yeah, it's in.
I think it's under display.
Oh, thank you. Yeah,
the first one.
This is what John Locke. Well, it doesn't matter what you set it to here, for it matters a great deal if you're trading a contract, because you're projecting forward. It turns out, as far as I can see, it doesn't matter, but John Locke recommends volatility small approximation, as I recall, in general. But it won't change any of these values, you'll see. But it will when you're actually trading it, because there it's making projections. Here we have all the values, we have all the prices, we can compute the actual value. There's no. That's what all the systems would do when you're looking at a point in time. So they do vary slightly even still, yes, you're correct. Okay, so that's the basic idea. And notice this trade hasn't been entered. So instead of a rolling trade for the butterfly combined with, and I could go into it. Can we go back? No, can we go to, Dave, to the PDF of the summary of the trades, if we could find that.
So, Don, I got just a quick question for you.
Yes.
Does the data show that there's a Vega problem on June 9th?
Let's go back and look.
Because that was the reason that I had to roll up.
No, yeah, we should clarify that. The June 9th,
there should be a reason for the roll, or the reason to do something.
Yeah, but you've already justified that. But let's look at it. Trade date.
Yeah, the Vega basically was positive, which I assume that you're.
Let's see. Yeah, well, it's minus 42.
You need to have the long call checked as well, don't you?
Which is?
No. Oh, well, it should be checked, yeah, but it won't affect anything.
Still zero.
42. Okay, maybe the number. It could be a slight discrepancy there. I do not remember. But the Vega, what did you have? Did you have you had a positive Vega on June?
Yeah, about positive 23.
Yeah, let's see, positive 23. Well, certainly on June 6th, well, that's the entry on June 6th. That's the corrected one. Yeah, there's your Vega right there, 64, positive. But that's the last day of the old trade. That's June 6th. Oh, well, let's go back to June 6th. No, it's June 9th is the day we looked at it.
It's June 9th.
June 9th, we did the roll. So, oh, I see. So, oh, that's an updated. June 6th. I don't know. There could be a discrepancy. They worked out for me. I don't remember. See,
just so you know,
I was adjusting these.
Just to let you know, that long call does have a Vega component. It should have about 29 Vega as associated with the long call.
There's no price quoted by Thinkorswim for that, so it gives it. That's the reason. Yeah. Okay. See, if it were an outright stock, it would not have a Vega. So Thinkorswim is treating this as 100% in the money. That's simply the data it has. It's a discrepancy in the data. You're correct. That's what it is. It's a discrepancy in the data between that particular incident between Thinkorswim and OptionView. OptionView is saying that it has a value, that really would be the long put in one, anyway, that there's a
mine's showing about 28 Vega for the long call.
Yeah, okay, so.
Just as a reference.
Yeah, you can look at the values. I looked at them. I traced this down. It's simply that Thinkorswim it doesn't assign for all through after a certain point. It says it's 100% in the money.
That's fine. That's fine. I'll just let you know.
Yeah. Okay, so Dave, could we find the PDF of the summary? Not the other one. The one with just a table of numbers, or you could get it off. Yeah, this one. So here's what it looks like as I calculated it. This is your. So basically, you have your long call you have your butterfly, and to calculate the cumulative profit, you have to do this. So in other words, you simply add the open profit, the profit. Let's see, the profit, each trade, each adjustment, you add the open you add that to get that, you add that to that to get, you just cumulatively add in the open profit. And sure enough, this shows, notice the nice rising, I think in a way this is, it shows a nice rising profit on the long call, and it shows the butterfly. These are successive adjustments. Most of them, lost money, but you don't care because you say that's, I'm not into making naked bets. So notice it's monotonic increasing overall profit. I just did the first few days. So this is a simple calculation you can do in this little spreadsheet on the side. And any final, do people understand the idea of what I'm saying? In other words, that's a method. You can bookkeeping it any way you want, but it's not trivial in Thinkorswim. You just have to bookkeep your successive trades. I hope that gets the idea across. Does it? Okay, Dave, did you want to add anything? Not on this, but necessarily. I mean, I don't imagine, but just in general. Ryan had a question. Go ahead.
You may have answered this last time, so forgive me. The best time of day to trade, you basically 12:30 Pacific time or 3:30?
I believe what Dave said last time, he's asking about the best time to trade, but what Dave said last time is just pick any time and do it the same time every day, preferably, and he doesn't even require, that isn't even necessary. Sometimes, well, you have to do it every day, but you don't have to do it absolutely at the same time every day. Is that correct?
Yeah, there's no magic to a specific time. Personally, I like to do it towards the end of the day, but somewhere within the last hour and a half of the day or so. But for example, my son would do it at one point where he was heading off to work at remember this East Coast time. He had to go to work at 9 o'clock in the morning, so he had to make sure his trades were done by 8:30 in the morning. And that happened to be, since he couldn't trade at work, that was his end of the day. So that's just, you have to pick your time.
We're at the witching hour here. We're going to, where, Dave? The Cameron Bar and Grill. Please join us. Let's have a really nice hand for Dave Thomas. Thank you very much, Dave.
Well, thank you, guys. I'm heading out as well for a nice dinner with my wife. So
have a great evening. Thank you.
All right. Thank you, guys.
Bye.
Bye-bye.